Hi, and welcome to the Market Alert for Friday, the 16th of July 2021. So, as stocks saw, demand for downside risk hedges reaches the highest since 2018. Investor anxiety is on the rise. I bet it is. Powell tells Senate he's not concerned with rising cost of living. Well, he wouldn't be because he's a multimillionaire, as most of all of these people are, so they wouldn't give two farthings about whether there is a rise in the cost of living. It doesn't affect them, just affects the majority of other people. Economic nonsense is extremely well anchored in fantasy land and not just at the Fed. The only thing that's clearly well anchored is the Fed's groupthink silliness, which we've seen for 13 years, to be honest with you. So this all continues onwards and upwards. And if you want to watch the Fed or any sort of live broadcast, I think Fox Business here on YouTube do this. I found Powell yesterday. I was surprised because it's very difficult to find a live feed. I watched about 15 minutes of it. That's as much as I could stomach. But you can see yesterday that he testified for 2 hours and 20 minutes, the Humphrey Hawkin testimony, which is over a 2-day period and happens every 6 months. So it goes on for a while, which is why the market was quiet yesterday afternoon. Not just a 10-minute job like Lagarde and the ECB, a good 2-hour session there. So if you want to see any of these, they're on here. Like I say, not for me, but I do get asked, can you see this anywhere where it's live? And that seems to be the place from what I can see at the moment. Fox News, Bloomberg used to do it, but they stopped for some unknown reason. Meanwhile, news today, while we're talking about it, core retail sales from the US at 1:30 and then 3 p.m. We've got the prelim UOM and implied volatility. Just notice this is missing. Let's just drag it in. You can see that that 17.58% was noteworthy in the morning session yesterday as the DAX moved to the downside, as did the Dow futures, recovering once Powell spoke. And today this has been brought back to 13.76. So whatever they saw yesterday, maybe it was because Powell was going to be speaking, they didn't know what it was, so they upped the ante in the insurance part of the options for yesterday, and now he's not going to be speaking. It's all done and dusted. It's fine, and that risk there you can see has been removed. Let's have a look at the markets. We'll start off with the Dow, if I can find it. There's the Dow on the daily chart. You can see yesterday down in the morning session, brought back in the afternoon by Powell, and now starting to move to the upside. And I've just spotted something in here actually. I was looking at this 89% when I was setting up this morning, drawn in from here down to here, projected back up, and we're already through this, which we've looked at this week. We've got the all-time high here, but it's what's going on here that's interesting between there and there. So let's just zoom in on this one and have a look in a bit more detail. So let's grab the markup tool, and from here to here, projected back to the upside, is going to be interesting. There's two areas of potential resistance there. So let me just redo that. More haste, less speed. Just get rid of some of these individual lines. And as the market makes its way back to the upside, what we're looking for here is for prices to break the 89 here and the all-time high. So that's what you want to keep a close eye on. We're already through the 78. The all-time high is on the cards, there's no doubts about it. And the other area that you want to have a look at as well is as we approach this high, you want to see that taken out as well. So these two areas that we have drawn in here prior to the all-time high are crucial for the Dow, and then of course going through the all-time high. It's Friday, there's only a couple of bits of news. The odds are that we're going to see a new all-time high in the Dow. Yesterday, like I say, the market was marked down early on, and then it was brought back when Powell spoke, and again you can see that classic retracement, and then off up to the upside, and then stuck in a range before managing to rally back to those highs before the end of the session. And overnight, you can see yesterday's high already taken out as the market is continuing to move to the upside there, and a bit more clearer in the 30-minute chart there. You can see we've got the high, the one I've just marked up from a few days ago, which will be Tuesday, I think. No, that's Wednesday, Thursday. Yeah. So yeah, watch that high, which, like I say, it's already here. It's that one there, 35,062. Let's have a look at the DAX for yesterday. We can see this was down a lot sharper than the Dow, which is unusual. It was actually leading yesterday morning over the Dow and the pajama traders, trading down to 38%, 20 bar moving average, closing below this, big spike in volume, but coming back overnight with the Dow futures there, but not near the all-time high as far as the DAX is concerned. It's got quite a way to go to come back to this level here. So again, let's just move down a few time frames, and you can see that we sold from the DP level there, and all the way down 150 points. Then it traded sideways during Powell. You can see a choppiness there. This is in the 30-minute chart before it moved to the upside there. And overnight in the 2-minute chart, we can see that prices are at yesterday's low. Again, notice how prices came off this low. They did do yesterday, but only temporary, and then the market, once it breaks back for a second time or third time, tends to move to the downside, which is a clue which we'll look at in just a moment. Prices up from the close, and all of the averages in the right order, heading for the DP. For the German DAX, the high is going to be a long way, as you'll see as I compress the chart there. It's a long way to the upside. Doesn't mean to say it's not achievable. It's only 120, 30 points from where we're currently trading, and above the DP level there. In the metals markets, interesting pattern continues. We'll start off with the dollar as we've got it here. This is just turning to the downside, still stuck in that sideways range. Again, I could do this here as well, just to see how we fare on the upside. We need to take out the 89% that we've got up here if the dollar is to move to the upside, but at the moment it's stuck in a bit of a sideways range, trapped between the fib retracements there at the moment. The silver is sideways to higher, stuck at 62% retracement, barely moved this week, just an upward trend, and you can see that we've got rising lows and the market above the 5-bar moving average. But compared to gold, which has had a really nice move, the suppression of the silver price continues, as we can see here, and it's easy to do when the market's quiet as it has been during this week. So the gold market trading up to 50% retracement from this high to this low, but if you were to take it off this one, it'd be at the 62 level instead of 50%. Now I won't draw it in, but you'll probably see that. Okay, let's have a look at yesterday's trading session, see what happened there. So the market opened, was sideways. Again, see the importance of the low the market went through this, and the attempt to buy back here is quite significant. A tiny bar, a lot of volume. There's your low. We want to get the market back above this if we can. And you see the market drive back there in order to do this. The market stops at the 20-bar moving average, and I've spoken about this earlier in the week, that this is, if the market's already short, this can give you a re-entry for the downside. Now, there's two issues that could happen here when this, if it does move to the downside, and that significant one here, that the low needs to be taken out. You have got the S1, but in order of priority and importance, the low is the one that needs to be taken out, because they, as I say, in a bull market, they'll want to keep the market making rising lows. So the low is very important. So then we've got the psychological level, and we've got the buying there as well. So let's just move forward through this. So there's a sort of a re-entry situation there, and you can see I've also drawn the fibs in there. You can see the market sitting at that low but eventually it gives way, goes through the 89 and the low, and then once you've cleared that out of the way, the selling increases and the market trades down to the S2. Now, this is a very important price bar because it's come off the low, and this is the highest volume bar that you've seen so far in this trading session. And the range of the bar, again, is not much different than the previous bar, slightly longer, but it does contain some selling, but also you can see that it's closed off the low of the bar. So there is some buying in here. So prices slow down, and then we get the test. So we've got the selling, they try to buy back a bit more there, and then look at again this bar here, tiny bar, huge volume at the S2, and then you've got prices still closing below the 5 bar moving average, keeping it short until they don't. And then we start to see again, we've got another retest here of volume similar to what we have here at the same level and at the S2. So you can see they're trying to switch the trend here, and then they do it in style as they bring the market back. We have a potential buy signal at the low. The market fails to fill this. It was just a matter of let's take out a few of the traders that were short and remove the stops, bring the market back 89% to the S1 as well, and then prices trade sideways to lower. We have a sell signal, and I'll just go through this quickly as the market moves down to the S2 again. It's an 89% retracement there as well. Prices are still closing below the low of closing below the 5 bar moving average, and then they trade to this low. Again, this price bar, similar thing. Prices come off the low. Looks like there's selling in there, but the brakes are being put on, and at this area it's nothing wrong with taking the profits off the table, because you're at an area where there was significant buying before, and you can expect a bounce from this level. That said, I didn't expect this sort of bounce that we got, and this, you can see the stops being taken out in this bar as the reverse prices. Anybody following this down will have been taken out. Prices move back, and this time they go straight through the 20 bar moving average up to the 89 of this high to the low, double bottom low there, and then prices stop, and they reverse and move sideways for another move to the upside. A lot of resistance here and here to get through, and we've got the S1. However, we have got the low that we need to get back through as well, and prices struggle as they come through here. You'll see prices struggling. It's an 89% retracement, and I thought no, I'll just stick with the scalp on this one. The market then puts in an increase in volume, even though it's below the average line. It's subtle, but you've got this resistance here, and you've got the S1, the S1 there, and 78% retracement in the fibs as well. And then prices move up once more. I redrew the fibs, the entry price, which you have to, but we can see prices struggling at the 89 there, offering a few more points, but I was already out of the trade, stuck at the 89, watch the volume increase, and then prices close back below the 5 bar moving average, and then move back to the downside, which you'll see there. So we've got this trade filled as well. Market then moves towards the downside. We've got this area of buying here, which I've drawn in with the extension. The scalp is just below this as well, and we've got some more buying on this side as well. Again, notice how prices came back up to the 20 bar moving average, failed to close above it, and then once closing back below the 5 does add a bit more weight to the downside. And prices do this, and unfortunately ETX Capital, the platform, switched off, and it wasn't just on mine. I spoke to somebody else, but fortunately I was able to keep an eye on proceedings as IG index wasn't, and then I had to reload the charts, and prices eventually traded down once we were back on stream, and then start to come back above the S2 there after the 10 a.m. Session, again stopping at 89% from here to here. So let's move on to the afternoon. Powell was speaking, which lasted, as you saw, 2.5 hours, so there's not a lot to report here. All I did was draw in some fibs. I didn't take this trade because of Powell. He only has to mention something about continuing QE or anything about not raising rates and the market would shoot up. So I was just playing with the fibs during the session. You can see there, you'll notice that the market starts to trade between the Fibonacci numbers there, 62 back, and I was just drawing them in the afternoon, and then later on in the afternoon you'll see how the market came back to 89 there, and from there back up to there, 89 as well. So you can see the importance of these numbers, and that's how Thursday unfolded. So yeah, there were some good trades, but the afternoon, nothing with, unless you took that trade. It did trade down to the scalp area and a bit beyond, but with Powell speaking, it always makes it a bit of, you should be wary. You just never know what they're going to say, and they're always going to try and pump the market to the upside, which is what we're seeing on the overnight as I record this. Okay, that's it for this one. We're at the weekend. Have a great one. Enjoy the sunshine, and as ever, thanks for watching. See you in the next one.